Check mic. Hello, and welcome. Today I'm gonna explain about the strategy that I use for for a trading spot. This strategy called algorithm or follow the whales bot. I learned this strategy from book called Measured Movement by David Hesley, and he is really top tier mentor for trading. But sorry guys if my English doesn't good enough. If you have a question in the future, you can ask me in the Discord. I will have it on the description. Okay, I will continue. In this video, I'll show you how the basic strategy that the most safe for me which is for a trading spot. The strategy is actually also good for a future market, but it's a bit more advanced, I guess, and there will be a lot of time to explain. It's just too complicated to explain how the advanced algorithm strategy. But don't worry, by watching this you will understand how the market move. You will able to understand there's participants who will affect the price, not a manipulation. So I repeat once again, the time frame I use is daily here. You can see you can use the other big time frame, but I don't recommend. I don't recommend the micro time frame such under 1 hour, but bigger time frame, the bigger chance they gonna win you. The bigger trend always eat the small trend. That's why that's what my mentor said. That's why I told you guys this strategy is really good for spot trading. All you need is Fibonacci and only use 3 level like this, which 0.618, 0.5, which we call the golden zone, and negative 0.236. Sorry. So usually the whale bot, or we call the bot trader, always take a trade on the 0.5 or 618 golden zone to trade, and they will have a taking profit level on negative 0.236. So like this, they will long here and they will taking profit here. Their stop loss is actually relative, but the most sure thing, their stop loss is always under the 618. when where 618, when the price breach 618, this suggesting that this uptrend is weak. Either there's gonna be reversal or maybe deep retrace. But yeah, when the price is breaching the 618 or the golden zone, that's a sign of weakness. Okay, so this is the example I will show. First, they will have the first trend, the first uptrend. This, and they will retrace either to 0.5 or 0.618. Then they continue the trend. Sorry. This called one measured move. This where the price was retraced to golden zone and reached its profit taking level. It's called one measured move. Okay, what are they gonna do next? First, they they might gonna continue the trend, the uptrend, with extension. So the anchor is the latest highest hike, like this. Continue the trend, or they will retrace where the last golden zone is the anchor, like this. uh, Sorry, this. Or if this fell again, if extension fell, this the second anchor is fell, the third one is from its bottom. Now you will understand, right, what is the retracement, why is the golden zone is really important. So let's try at the BTC chart. I actually already tracked them since the bottom, since the COVID-19. I have it here. So let me show you. Once again, it's important to use big time frame. I usually use daily time frame, non-log, and auto. It will help me to track the history. So here was the bottom. Notice that the price respect the golden zone and reach their profit taking level. The extension was failed. So if you long here, you lose. Then you drag to the second anchor. It bounced on the 0.5 and reach the target here. I don't know in other exchange if they really reach the target here or no, but sometimes where like this, I mean, when the price didn't touch the golden zone and then they bounce like this, it called front run. Front run. It's also happen on the profit taking level where the price didn't reach the profit taking level and they down. It called front run. It happens. It means the market is really bullish or really bearish. So the first extension was failed, but you can see there's a reaction here on the 618, but it failed. Second anchor, it works and reaches the level. You see, the extension is really work here and touch the profit taking level. And then this was well. right? uh this one is for the lower time frame, but in the daily we should have it like this. Okay, this is the anchor. It fell. You might be long here, but you get stopped. Second anchor, it works. So I told you guys before, the stop loss is really relative, but I usually use the 0.7 as my stop loss, like this. Yeah, so where the price is breaching out the latest, my 0.7, I will get out from the market. Easy, just like that. And then it reached the profit taking level here after 70 days for the range market. You can see here again the extension was worked, but this should be at the lower time frame, right? So when you zoom out, you see the daily, where was the anchor here. Now if this was failed, we're gonna put the anchor down here, and we're gonna long this golden zone. Once again, you long here, you see the participant here, a lot of people buying here, the accumulation here, and reach the target here. You see again, there will be, see, extension. This is a bot who's trading it. These are bots. They have been programmed. It's not random, it's not manipulation, it's bots, it's mathematics. That's why it's called algorithm. The second extension is work again. I think I forgot to explain. So the extension is can be like this. First retrace, they blow up the target, make the extension. This hit the profit taking level. It always work until it's failed. Like this. Back again. So that's why I drag the extension like this. But even if you drag it from here, it has a reaction. So you can do your Fibonacci. You will find a lot of confluence which gonna help you where the spot you're gonna buy. Where you're gonna buy. If you have a lot of confluence on there with your Fibonacci, RSI, or your trend line, that's good. It means high probability trade, like this. A lot of confluence here. There's really big chance you can win the trade here. You see the wick there. Okay, let's continue. Another extension works here. Anchor here. It is important to let the price reach the target, then you can pull your fib, right? So here reach the target, who are long here, and they're taking profit level here. You see the wick there. They're taking profit there, and they continue the market with extension. Yeah. Continue again. Continue again. Oh, I don't know why I'm lagging here. But now the BTC was when the last extension was fell, it fell, and then it fell again. You drag down from its bottom and look where there bounce. On the here where is really a lot of trader waiting to buy. That's why this price action is happen. Now today the first anchor here, here, and then they long the next halfway, the 0.5 here. Reach the profit taking level, you will see the reaction on the extension here. Here. This is not actually the front run. I think this was, yeah, they retrace not really deep because it's really bullish back then. It retraced only to 0.382. It's valid. It doesn't need to retrace on the 618 or 05. It, it even can retrace on the latest golden zone here, 0.7, but it's not really good sign for price if they are bounce there, because it's sign of weakness, like I said before. It touched the taking profit level, failed. You see, the bot still using this as an anchor, and you see this reaction. It's breaching the 618. Like I said before, it's sign of weakness, and it's failed to reach the target or this front run or but I call this failed because it's still far away from the target. And my next long will be right here. This is work to all the market that really respect the Fibonacci. I even track Solana, Axie Infinity. I track them all on the daily for the spot. BNB too. Shiba, yeah. I have a lot. All this coin I have, track them. Where I see the green, I mean when I see the chance that I can long there on the golden zone or 0.5, I will long there with spot, of course. So that's it. I hope you guys understand how this strategy works. If you don't understand, you can ask me on my Discord. I have it on my description. So see you guys there.